Welcome back everyone. GE completed a reverse stock split this summer. 4 months later, the stock market has spoken. It wasn't worth the time, the effort, or the confusion. Many people, probably some of you, went online this summer to complain and to try to understand what was going on with your GE share during the reverse stock split process. It seemed GE failed to communicate what was happening, leading to the comments like you see here. GE reverse stock split and my shares are gone. Additionally, brokerages failed to update customer accounts for the new values and the new share quantity, leading to comments like this. On August 15th, this Robinhood customer says they have not yet received their cash in lieu of shares. Another GE investor complains, I had 2 shares of GE pre-split. Still nothing in my account. No cash. No shares. 2 shares may not seem like a lot, but it does translate into a lot of investor dissatisfaction and, for brokerages, unhappy customers. It seems this unhappy Redditor had it the worst because they lost 4 shares and had to pay $38 for a reorganization fee. Wow. After everything was finalized, investors realized the reverse stock split had no real implications except for unlucky and displeased shareholders losing out on their shares when they had less than 8. Since less than 8 shares would have been converted to fractional shares and GE wasn't having that. GE chose to exchange them for cash instead. There would be no fractional shares for GE. They wanted all those loose ends tied up. GE is not the only company to reverse split their stock. Many companies reverse split their stock. Most of these companies that engage in reverse splitting are doing so because their stock is in danger of being delisted. Candidates for reverse splitting would be companies listed on New York Stock Exchange with share prices under or around $1. Since the NYSE can choose to delist, the NASDAQ has similar requirements, meaning companies must also maintain a $1 share price. Most companies that reverse split their stock are not the longest lasting member of the Dow Jones Industrial Average, as GE was at one time. GE is also not the first large company to reverse split their stock. Xerox, Alcoa, and Citi also reverse split their stock in the last 10 years. Citi used a reverse stock split to increase their share price after the disastrous 2008 financial crisis. The years between the sell-off and the reverse stock split were some of the worst on record, as they had lost respectability and significant market cap. Alcoa and Xerox both engaged in stock splits after spinning off parts of their business. The spin-offs caused the market caps to be reduced without simultaneously changing the number of shares outstanding. In effect, they had the same problem GE appeared to have had. However, they dealt with this problem as soon as they could, instead of waiting for many years. More on that right now. GE had a long history of purchasing companies and issuing stock to do so. The time period known as the conglomerate boom was a time when US companies were forbidden from taking over competitors. This led to the formation of many diversified conglomerates and was a fundamental part of the GE story. As GE dominated and then thrived throughout the 20th century, GE repeated the process of diversification and expansion over and over and over again until they were no longer thriving, and in fact they started faltering. GE topped out at a market cap of over $600 billion in 2000, making it the largest company in the US. After that, GE has been trending downwards. GE Plastics was sold in 2007 for almost $12 billion. GE Appliances was sold in 2016, fetching only half the price on sale. These sales, divestitures, led to the situation earlier this year when GE establishment said, we have too many shares compared to our competitors. We need to reduce our shares outstanding numbers so that Wall Street and our investors can understand us better. With this as the stated purpose, GE decided to reverse split their stock. 1 new share for every 8 old shares. This split was nothing more than an accounting transaction for most purposes. But as we saw the reverse split process, some investors became confused or came to realize the shares they thought they had vanished. Share counts not divisible by 8 would be purchased back for cash. GE had effectively engaged in a small-scale share buyback program at the same time as they reverse split their stock. Sneaky, sneaky. Hit like if you're getting value. Now to the point of why GE splitting their stock was not worth it. Let's start with the fact that GE has traded sideways and then downwards over the past 4 months. Even the news GE will be splitting into 3 separate companies in the future did not help the share price stay above pre-reverse split price. According to the GE spin-off plan, GE Healthcare will be spun off in 2023. GE Renewable Energy, GE Power, and GE Digital will be spun off in 2024. That means GE Aviation will be the last GE standing. GE also lost favor with institutional investors, the category of investor that was supposed to be all for this new higher share price from GE. Institutions were supposed to love the new GE because some institutions have rules that don't let them buy stocks below a certain price. Since GE was then trading at over $100 per share, institutions should have been lining up to buy GE. Alas, institutional holdings saw outflows in the third quarter of 2021 of 188 billion compared to inflows of only 484 million. We already talked about the pain and confusion inflicted on retail investors. This reverse stock split was not worth it. Before we get to what this all means going forward, GE is flat and has faltered over the past 4 months. Leave your price target for April 1st, 2022 in the comments here today. And the best guess will be pinned on April Fool's Day 2022. GE is still a company trying to recover from 30 years of leadership, trying and succeeding by the way of building the world's largest conglomerate. GE will take further strategic action, splitting up the remaining businesses into 3 separate public companies. This is the white flag I've been waiting for. GE is no longer planning to recover. It has accepted its fate and will simply fade away. These last months haven't been fun for GE shareholders, and I don't see a lot of optimism anytime soon. GE is trying to be strategically lean and it is expensive. It will stay that way until the process is complete. It is always difficult for short-term investors to accept short-term pain for long-term gain. Time will tell, but I'm sticking with my position. GE isn't going anywhere good anytime soon. Remember, make your own investing decisions. To find out the details of GE stock split as it was happening, click on this video on screen now. See you next time.